Good morning to all of you. Agriculture sector, doesn't need much introduction. All of you know that it has its own challenges, and it is due to the market asymmetry, due to the small size of farm holding and climatic changes and many other factors. One of the ways some of the challenges can be addressed is through technology. So today we have a very distinguished panel which covers diverse sector. We have Arjun, who actually has built a tech platform which enables both farmers, agri entrepreneurs, and processors finance in a risk mitigated manner. We have from Stellapps, Ranjith. So they are into dairy. So agriculture is covered, agri allied dairy is covered. Then we have from Aquaconnect, Raj, so which is a tech in fishery. Then we have from SatSure, Amit. So it's a very distinguished panel where we will be able to cover both agriculture, agri-allied, and climatic factors. So the entire sector will be able to cover very briefly. Without much ado, I would like to ask the first question to Arjun. So if you see the agriculture sector, the farmer financing has been extremely difficult proposition for financiers. So how Jai Kisan has been able to build a scoring model, a farmer scoring model, which the banks can utilize or financiers can utilize to reduce the risk?
Awesome. Number one, thank you so much, everyone, for joining us here today, early morning here today. Thank you, Narendra and fellow panelists, obviously, for putting this together and having this discussion, and Digital Fifth, obviously, for bringing us all together. As very well kicked off by Narendra, right? With regards to agriculture, it's a very large piece and parcel of the overall Indian economy, and I believe needs no large introduction, especially to the folks here. Around the question that was posed to us today, which is how do we build some sort of credit score for these farmers, and how do we kind of enable financing to these folks? I would like to take a step back very quickly and just walk you through A, what we do, and B, how we are inspired or what inspires us. Right? All of us live in a city or are in a city called Bombay right now. We are in Grand Hyatt. 5, 7, 10 minutes from us is one of the biggest slums in Asia. It's called Dharavi. I think most of us are very familiar with it. 15, 18, 20 years ago, I'm sure there must be a similar panel somewhere in India where someone asked someone else, how do you lend to the urban poor for consumer durables? How do we analyze them? How do we underwrite them? And how do we build a credit score around them? Right? Dharavi was a place where 15, 20, 25 years ago, people stayed off course from there. Today, there's not one lender who does not participate in giving some sort of consumer durable loans in that particular market. And as we all know, there have been fantastic, large, influential businesses like Bajaj Finance, which have been built by being able to provide some sort of financing to this urban poor segment, and then being able to provide a full stack of financial services to them going forward. Go back 15, 20 years, if you would have asked, how do we underwrite this fellow in Dharavi? It would be a tough question. And that is where we took inspiration and we said that, hey, if we can finance a Rashida to buy a cell phone in urban India, can we finance a Rashida in rural India to buy seeds, pesticides, and fertilizers to actually generate an income? Right? Logically, it would say, yes, hey, we are funding consumption versus income generating. Can we go out and fund income generating? Right? So I think that is the mission and the vision that we jumped in with, and we said that, hey, we want to go in and provide every Rashida in rural India the same ease with which a Rashida in urban India can go buy a cell phone, an AquaGuard, a washing machine, and things like that through a Chroma, through a Xiaomi store, through an Oppo store. And that is where we went and we provided digital solutions to the most important spoke in the rural economy, which is the MSME or the rural merchant, right? We help them digitize their transactions, A, and B, help them engage better with their customer in a digitized fashion. This is something that we all know in COVID. most of our businesses saw a spike. Because at the end of the day, all of us here help digitize some piece of some transaction, right? And as we help digitize the transactions of that particular merchant and their interaction with their customers, we started to learn a lot, A, about the merchant, B, about the ecosystem, and C, about the customers that they're dealing with, right? And that is where we were able to roll out products like Buy Now, Pay Later, where today a farmer can walk into over 35,000 retail outlets, Mr. Mishra. These are retail outlets of companies like Syngenta, Deepak Fertilizers, alike, right? And they walk in and they just say, hey, you know, I want to buy this particular product. Before Jai Kisan, they would say, sir, खाते पे डाल दीजिए please. अब merchant बोलता है खाते पे नहीं डालूंगा, भारत खाते पे डालूंगा, right? Which is our app. And that is where we activate the third thing for the merchant, which is offering financial services to them and to their customers at the post checkout, right? With regards to underwriting, Mr. Mishra, I think we've done it in a couple of different ways. We help structure it, right? So as we all understand, the merchant has been lending to that particular customer for decades and decades and decades. Yeah? Between families going down, you know, over a course of, you know, years. And that is a significant amount of intelligence that has been built up with that particular merchant on that customer and their relationship. And that is where when we lend to the customer, we actually underwrite the dealer in the first cycle. Once we get that footprint in a more kind of meaty manner, that is when we start underwriting the customer as a second layer independently of that particular merchant. And that is how within 10 minutes at 35 odd thousand retail outlets, we are able to disburse loans within 10 minutes to that particular farmer where they can walk out with a particular input. These largely revolve around seeds, pesticides, and fertilizers. I'll stop here. Thank you.
So thanks, Arjun, for giving the perspective on how the farmer financing is happening in the rural areas, and that to extend some 10 minutes, which is unthinkable. So my next question will be to Ranjith. Stellapps has been a pioneer in the dairy sector. So there are three broad challenges in the dairy sector. So one is that how do we enable that the quality produce is being produced by the milk animals, and secondly, how do you measure them effectively? The third challenge is that how to ensure that that the farmers get the payment in time. So these are the three questions which has been always challenging. I would like to know from Ranjith how the challenges they are handling in Stellapps.
Sure. Thanks, Narendra. Hello, everyone. Good morning. It's good to see a lot of familiar faces. When we were on panels a few years ago with Arjun, with SatSure team, with Aquaconnect, the focus was all about agriculture, you know, what we do in agriculture. But it is good to see that today all of us are, you know, speaking of financial services in the supply chain, right? Which was not a topic that we would touch a few years ago, but today that's become a very catalytic component of the agri supply chain. So we all talk fintech language, we talk financial services language. Agriculture somehow is incidental, right? That's how it's turning out to be. And I think the stage is well set for this conversation. My colleague Rahul Malik was here before this panel. So he would have given you a financial services view of agri. Let me give you an agri services view of fintech, right? The corollary. So what we essentially have done is, you know, collect data across the agri supply chain, dairy specifically. I hate for dairy to be called ancillary. I think it's primary because it's the largest crop. If you consider milk as a crop, it's the largest crop on the planet, right? So it's, you know, horticulture, you know, fruits and vegetables, paddy, those are ancillary, while dairy is actually primary agriculture. That's the way we look at it. It's 4.5% of our GDP, just the milk produce. And if you consider the pre-harvest parts of dairy, that's another 3.1%. So it's a 7.6% of our GDP is pre-harvest plus post-harvest of dairy, right? Look up any internet resources, you get various numbers, but we've been trying to crunch these numbers for the last 12 years, and I can give you a big Excel to show why it's that large an industry. So what we have tried to do is collect data from using a combination of hardware and software across the supply chain. So our definition of deep tech goes beyond an app and data. We have our own hardware design team because this supply chain has been a fairly analog supply chain, right? No data coming on board, right? How do you underwrite risk with all the data? How do you do all the great stuff that Arjun just mentioned? You first of all need data, right? Reliable data. If people are still giving you data in Excel sheets, giving you data, things written down on paper, you probably can't rely on that data too much. You need consistent, near real-time access to that data. So we actually designed a few IoT or Internet of Things hooks to pull data out from a highly fragmented supply chain, starting from pre-harvest, cattle nutrition and all of that. The farm piece, where the farmers actually have the animals. It's a highly fragmented supply chain, very smallholder farmers. So milk gets aggregated at the collection centers, the chilling centers, and then comes to us as pasteurized, paneer, ghee, and all of that. Right? So along the path, we collect a lot of data, right? But why do farmers do agriculture? They need money, right? At the end of the day, right? We need good product. We need cheese. We need milk. We need proteins. We need our immune system up. That's our view of agri, right? Farmers' view of agri is money, right? So the first thing that we did was to put money in the farmer's account, because for them it doesn't matter cows, paddy, horticulture. It's about money, right? The first thing to do was to digitize the entire supply chain using a combination of hardware and software, then put money into their bank account. So we call it as digital direct farmer payments, or DFP. And we have always looked at lending a credit as not a lending business, but a collection business. Lending probably is the easier part, but how do you collect money back? So for us, the idea was to do two things. One, come in the path of farmers' income. They are doing dairy, they are doing horticulture, they are doing aqua, they are doing a whole lot of things to make money, right? So let's get the first step out of the way. Put money in their bank account transparently, in near real time, without anyone coming in the middle, which will lead to manipulation of that entire cycle of cash flow to the farmers. And to do this, a whole lot of tech. We have done integration with various back-end banking gateways. We have our own LOS, LMS, loan origination systems, loan management systems. We have a whole bunch of partners who we work with, large banks, small banks, as a business correspondent, to ensure that the cash that we have digitized for payments that eventually pays for quality produce can then lead to various types of credit products. So that's basically how we have gone about it, how we have tried to solve for the digitization of the supply chain, and then use that data to do payments, and then subsequently see how this entire digitization can also help solve for productivity, quality, and traceability.
Thanks, Ranjith, for explaining how we were using data digitization to improve both efficiency and also ensure the farmers get the money in time. Now that we have spoken about agriculture, farmer financing, then we have talked about agri-allied, which is the second largest after agriculture. Now it's time to go to fishery. Fishery contributes around 1.2% of our GDP, and this also gives a substantial amount to our foreign exchange revenues. But despite its contribution and exports, this is one sector which is even lagging behind agriculture in terms of formal inclusion in the credit access. So this sector has its unique challenges. Because of this, this has got lesser attention and lesser inclusion in the formal credit cycle. So I would request Raj to throw light on what are the challenges which is actually inhibiting this, and how Aquaconnect, being a fintech player, is working on overcoming these challenges.
Hello, everyone. Thank you very much, Narendra, for graciously accommodating us in this panel, because often fisheries is the most underrepresented, sector when we talk about food value chain. So as Narendra had mentioned, this sector is one of the priority sector for India right now. Recently, the government also understood the kind of need of this sector, so they had created Ministry of Fisheries separately. It used to be under Agri sector, and now we have got a Ministry of Fisheries. So here, the biggest impediment for any development for any sector is lack of data and lack of data-driven decision-making capabilities. Let me repeat it. It's the lack of data as well as lack of data-driven decision-making capabilities that is contributing to the inefficiencies of any value chain. So be it agri, be it like agri-allied sector like a dairy. So the biggest challenge is like the lack of data, which is actually creating the opacity. In fisheries, there is one more layer of complexities because everything is underwater here, right? So that makes this much more complex than the other food value chain because you could see them, but here you cannot see them, right? So this is when we would have to deploy certain risk mitigation strategies. So as a full stack player, we are providing solutions to the farmers, we are providing solutions to the input retailers who are in turn working with farmers to provide inputs such as feed as well as healthcare products. And finally, we are also working with buyers to enable the market linkage. To do this efficiently, we need to have the right sets of data. So the challenge here is like India is different from Bharat in terms of digital adoption. You cannot just give an app to a farmer or any other stakeholder and then start collecting data from day one. It's not going to happen. So we have to devise methods to get data non-intrusively. For an example, like we do have like technology adoption in all parts of the value chain and we are getting certain data sets from them, right? On top of that, we have created a pioneer geospatial insights engine, so which uses geospatial images as well as art, so that we are able to get transparency, bring transparency and get the right insights about farms. So we can even talk about going to a farm level and then see whether it is a shrimp farm or a fish farm, whether it is a general water body. So we are able to differentiate 70% of Indian farms through our non-intrusive geospatial imagery technology, right? That's the first part. So non-intrusively, when you do it, you'd be able to achieve the scalability. Like I'm talking about this technology is now working for Indian farmers. Probably this can be easily expanded into other geography wherever there is aquaculture activities running. So to sum it up, what I'm trying to say here is like the technology should be non-intrusive to be able to impact the masses. That's the first thing. And the cost of technology also needs to be thought through. Who is going to be assuming the cost of technology? How are we going to build our business model around it? Because we had built a very, very unique business model wherein like the cost of technology need not be borne by the farmers or any other stakeholders. So we are enabling a trading platform on top of that, and then we are able to make it sustainable. So to sum it up, it's the technology which can bring transparency and predictability. This predictability can help us solve multiple use cases. Something like how do I get the best input to the farmer? How do I find him the right buyers in the nearby markets? And finally, the credit piece. Because as I told you, like it is underwater, so it poses many more challenges for a lender. So we need to be like providing him near real-time monitoring so that like he would be able to provide lending solutions to our network farmers and the value chain stakeholders. So I'll pause it here and then I'll take more questions in the second round. Thank you.
Thanks, Raj, for explaining very briefly the entire value chain of the fishery and also a tech-enabled solution where you are intervening at all the stages of value chain and making it easier for farmers, bankers, and all other stakeholders. And now we have spoken about agriculture, we have spoken about dairy, we have spoken about fishery. Now the biggest factor in agriculture, whether it's a dairy or agriculture or fishery, is the climate change. and there is no need to mention all of your hour how climate is unpredictable, how is it changing. So we are fortunate to have Amit here from SatSure. So what I would request him is that to explain briefly about what SatSure does, and also talk about how the satellite imaging is being used to mitigate some of these risks in agriculture, and also reduce the risk for the farmers, so that they are more access to credit. Because as a lender, we look at the credit risk, what is the credit risk in each of the lending. Now, if through satellite imaging and technology, we are able to reduce the risk, then the farmers will get easier credit access. So I would request him to explain all about it.
Sure. So let me introduce first SatSure. So we are a deep tech company which primarily uses Earth observation data to give location-specific insights. So that's a tech jargon that I spoke. But in simplicity, we use satellite imaging to look at what is happening across the globe, whether it's agriculture, aquaculture, and depending upon what information is visible to us or what we analyze, we actually create data and insights for people to consume. We have been working within the agriculture sector, we have been working within the infrastructure and climate change. Now today, if I have to look at the panelists over here, each one of them is really working towards solving the major problem in India. We have close to 150 million farmers. Formal credit access is available to somewhere between 6 to 8 million farmers. That's what has been documented for. The problem over here is, as everybody said, it's the data that is not available. Now, each one of them is actually working on amazing technology to make funds available. I mean, Jai Kisan is making it happen in 10 minutes. We have Stellapps, who has been enabling by giving credit. We have Aquaconnect, which is giving access to credit to farmers and retailers. But the major section of farmers are still dependent on traditional banking services, especially the public sector banks. 2 years back, we were being invited by SBI to look at how things work within their ecosystem. What we realized was for getting personal loans, it's very easy. The same public sector bank can process a personal loan worth 10 lakh rupees in 10 minutes. But when it comes to agriculture, which is KCC, prominently known to all of us, it takes about 45 days. Now the challenging factors over here are somebody has to physically go and visit a place. Today, in today's date, I can just use Google Maps and reach from point A to point B. From Mumbai to Delhi, it is very easy. But within a village, to identify where the land parcel is one of the biggest challenges to solve. Now, second is, obviously, there are a lot of regulations a bank has to follow. They will look at funding a crop which has been primary crop, basis a fund amount that has been decided by SLBC. Now, how do you take all these decisions? The traditional way is you take an undertaking from a farmer. Okay, he has grown a crop. Now, KCC is given 365 days. You are not even sure whether this crop was there or not. How do you revalidate it? So you go with certain assumptions that, okay, everybody over here grows an X crop. So in Nasik, everybody grows grapes. But that's not the reality. Or if in Punjab you go, everybody does wheat and paddy. But that's not the reality. Now, how do you get all this data in a digital form and most importantly, consume it from a decision intelligence perspective? Because Earth observation has been existing for 2 decades. The challenge is each one of us came and gave layers and layers of data for banks to consume, and that's not what somebody at the end point can actually access. We have to make that data meaningful. So one of the things that SatSure has done over a period of time is it has actually developed products which go beyond data. So if in a simplest way, the underwriter who is supposed to take a decision that whether to lend or not, or what is the risk associated with this lending, is something that we try to solve. In simplified way, he will just log into our systems, ask or request for a particular land parcel, and what our systems do is using data that is primarily available. Not that this data does not exist. To be very frank, a huge amount of data. Post 2018, the government itself has taken efforts. It's just that the data is dispersed. You have Bhulekha, which gives you ownership details. Logging into that system, trying to download that data is itself a big task. You have remote sensing departments of each state which have already digitized that data. But both these data sets are not married. Now that's what SatSure did as a first step. We actually at the back end got these two data sets married. We created a portal, somebody just logs in, and today they know exactly where the land parcel is. You know exactly who owns that land parcel. And the best part is, this comes as a consolidated report to the end user. So the underwriter just looks at a report and he knows that, okay, there is something that has been verified. There is a verification of the crop that has happened. There is a verification of the land parcel that has happened. Other subset data sets which are very critical to him, but from an earth observation perspective, we many times missed out. For example, the land is irrigated or non-irrigated. Critical factor to decide on the lending amount. What is the cropping intensity? If he is doing two crops in a year, definitely it is advantageous. If the two crops have been grown, what has been the health of the crop, what has been the MSP of the crop or the retail price at that particular village. Now all these data sets when are coming in a single page or a single report, it helps this guy to take faster decisions. So today, for example, we worked with our anchor tenant clients like HDFC Bank, ICICI, Kotak, and we delivered a lot of successful use case which went beyond the underwriting stage. Today, this technology is used for monitoring. You know which land you have fund. All you need to know is know a little bit critical factor. Like for example, when is this harvesting going to happen? So that collections becomes much more efficient. If collection becomes efficient, recovery is obviously advantageous. So today we have been able to reduce from operations perspective, for example, we have been able to reduce the load by around 75%. So more than 75% of loans can be passed even without going for a visit. So the TAT of 45 days has gone down to as low as 2 or 3 working days. Now that's one advantage that we have brought. Because of monitoring our collections, we have been able to bring down NPAs by 1.5% or increase collection efficiency by around 18% is what we get as a feedback. Now all this is something that is enabling credit. Today our partnership with organizations like TransUnion CIBIL. So for a very long time, there is the lending in agri sector has been happening through intent. 725 score is there, go ahead and give it to the farmer. But the main part which is associated with risk is always capacity, which has always been missing. If you and I apply for a loan, I cannot go and say because I have a rating of 725 or 800, give me a loan for a house which is worth 1 CR. They will look at other income data sets and all, which is currently missing in the agri sector. Now, what SatSure brings onto the platform is this particular capacity. You tell us the land or collective land parcels of those farmers and we will come with an income potential that this farmer would have done over a period of time, maybe 3 seasons or 6 seasons depending upon what has been underwritten. Now that adds value to this ecosystem. What is supplementing to the farmer is that today there are close to estimated around 30 or 40 million farmers who are very new to credit. Now can I make a report, the true digital currency for these kind of farmings? Can banks and financial institutions go beyond? Can I be a part of their policy in such a way that if the intent is missing, he is new to credit, there is no CIBIL credit that exists or a CRIF credit that exists, can an alternative data set be looked at for giving a formal financing to these farmers? Now that's how we are helping both the financial institutions as well as the farmers from access point of view. Obviously, it's the same data set when it comes to looking at earth observation. You are looking at agriculture, you are looking at farms, but the effect of climate change is very different. I mean, if you look at the way the predictability has changed is very high. Seasons have shifted. Today we have rainfall in Decembers. We had a very good cold wave in Mumbai, something that nobody has ever experienced for a very long time. Now, all this is climate change. We seeing in city, it's a very different experience. But the farmer, it is impacting his crop. Now, gone are the days when everybody used to say that, okay, farming will happen in just 2 weeks. The total shift between first day of seeding to the 45th day of seeding is very high. Now, crop shifts have happened. People who were putting A crop have shifted to B crop. Now, all this is impacting the whole credit ecosystem. The decision-making process has been slowing down. A farmer cannot wait for data to come in. Now, supplementary information that we can give is where we have these technology apps that each one of us has actually, is where can I reach out to this farmer and give him information pertaining to weather? Can I tell him that in a particular region, there is in his plot where we see that the health of the crop is going down. So instead of him looking at the entire farm, can he concentrate on his efforts on that particular part? We'll do loss assessments over a period of time, so which are today being utilized by insurance companies for better insurance payout. So in all way, the whole ideation is that how this individual who is a farmer can get access to finance, can get information pertaining to crop health, crop care, climate change, and most importantly, last part is where he gets enabled at all means. Today, all the technology there that exists is with this single ideation that how we can enable the farmer. And SatSure, being a technology company, its vision is to see to it that not only the 150 million farmers that exist in India, but globally, especially in Southeast Asia, how I mean, Raj was very, very prominent about it, non-inclusive technology, that how we can bring it in such a fashion that it is available to anybody and everybody who is working within this farming ecosystem. Thank you.
Thanks, Raj, for explaining KCC, all parameters and everything in detail and how each step they can mitigate. As a banker, I can fully empathize with it because that's one of the most challenging but the largest product in the industry. So we have little lesser time. What I would request each panelist to restrict it to 1.5 to 2 minutes as a maximum, so that we can have a rapid round and then we can go for the question and answer. So Arjun, your Jai Kisan has been one of the pioneer in corporate anchored partnership model based farmer finance, and which is tech enabled. So I would like you to talk briefly about it.
Sure. So I'll try to keep this very quick and just walk you guys through the value chain. India is one of the very, very few markets where merchant credit is an expectation. It's not a service, right? What does that mean? That means that a lot of us will go outside to the Kirana store, we'll buy a bottle of Coke and we'll buy a vada pav, and we'll tell him, hey, put it on my tab, right? A lot of us take milk every day in the morning, the milkman delivers it, but the milkman is expected to wait till the 30th or 31st day of the month to take his money or her money back, right? We're a country that operates on credit. Now what that does is, for value chains which operate in rural India and products which are being sold in rural India are more income generating in nature rather than consumption in nature, which means that they will be able to pay back for that particular product only after they generate that particular income, right? So now if you think of any value chain that operates in rural, this can be an agri input company, an agri equipment company, etc., right? Let's think of a corporate which is an agri input company. They're selling their products to a distributor. That distributor then is selling them to a retailer, and then that retailer is selling them to the customer. Yeah. Now when the retailer sells it to the customer comes in and says that, hey, I need to buy these seeds and I'll pay you back after 4 months. Now the retailer gives the same explanation to the distributor, and the distributor gives the same explanation to the corporate, right? So interestingly, what we found was that with companies that operate in this space, they're sitting on an AR, which is account receivables, of anywhere between 25% to 70% on an annualized basis, which means that gives an opportunity for tech companies like us and for banks like DCB to be able to plug in on the back end and provide financing for that AR. Now what does this do, right? This obviously helps clean up the balance sheet for that particular corporate, yeah? But at the same time, it helps get discipline because you're moving away from a partnership relationship, which is an anchor or a corporate giving credit or account receivables to their dealer, to a lender-borrower relationship between a lender and that particular dealer. Thereby, financial discipline becomes much better. The working capital or the balance sheet of the particular corporate gets fully cleaned up. But the most exciting thing is that that particular dealer or that particular retailer or distributor, that particular MSME gets involved into the overall footprint to be able to get access to other financial services as well. And that point is when we offer to them Bharat Khata, right, to be able to use and digitize their transactions with the corporate, but also with their customers, interact with their customers in a better manner, and avail of financial services themselves and also offer financial services to their customers, right? So I think it is, Mr. Mishra, more about being able to identify that, hey, where can one step in? And like many of us are doing, provide a value proposition not to one stakeholder in the value chain, rather to majority of them, so that you're able to comprehensively provide a solution, but at the same time, A, minimize your CAC, because that is something that blows out given that we are operating in rural India, and B, mitigate your risk. Because now there's a corporate in the play which is operating with a significant amount of data, as we call it, because they've been interacting with these dealers, but also the dealer's entire annual income is basis whether the corporate actually gives them products to be able to sell further. Thank you.
Thanks a lot, Arjun, for explaining the corporate linked partnership for farmer finance. Now, Ranjith has partly touched upon, but I would still like him to elaborate on this. Because one of the key aspects in dairy is the input cost and also optimal use of inputs. So how does technology enable optimal use of the animal feed, cattle feed, so that the productivity is enhanced and also they get good quality input at reasonable price?
Yeah, let me answer that in a slightly different way. Interesting to see the correlation of credit and kata to vada pav, right? That also reminds me of during my smoking days, almost all of the cigarettes were on kata, but that's probably a couple of decades ago. But coming back to this topic, the way we'd like to look at credit. Audible? Yeah. The way we'd like to look at credit, right? The quality of the produce on your plate is a function of credit to the farmer, right? An interesting correlation. The quality of a food on your plate. It could be an antibiotic-free milk. It could be paneer that melts in your mouth. Is a function of the credit to the farmer. How is this in a correlation? To increase the quality of milk, the productivity of the farmer has to go up. Otherwise, I cannot do at the current scale of 10 liters per farmer, smallholder farmer, 2 to 3 cattle. I cannot potentially do things like chilling of milk at the farm. I cannot do things like doing an antibiotic test at the farm because it's too expensive, right? But if the same farmer can increase his throughput to, let's say, 10 animals produce 100 liters of milk, which is possibly the same for other agriculture produce as well. If the throughput of the farm goes up, you can afford to do more quality interventions, right? You can afford to do more antibiotic tests. You can afford to do chilling, at the farm, which again brings us back to the point. You need to provide capital to the farmer to be able to buy more cattle. You need to provide capital to the farmer to be able to buy some equipment to chill milk, at the farm. You need to provide capital to the farmer to automate some aspects of farming. And unless you do that, the quality can never be met. So inputs that Narendra mentioned is a case in point. If the farmer needs high-end quality inputs, be it cattle feed, cattle nutrition, be it other agri inputs that he needs capital in advance. Otherwise, he'll never be able to access these quality inputs. He's going to be feeding his cow hay, dry straw, and expect miracle to happen. That's not going to work. So he needs capital of different types. He needs working capital loans. He needs term loans. He needs receivable financing to ensure that he's able to buy the right inputs of the right quality at the right time without having to store a lot of inventory and then help improve productivity, which in turn helps boost quality. So it's one virtuous cycle. It's, credit leads to better productivity, better inputs that in turn leads to better quality, and then it becomes a win-win for all the stakeholders in between. So we sort of try to enable this virtuous cycle of productivity, quality, and credit across the supply chain.
Thanks a lot, Ranjith, for explaining the importance of credit. We are feeling a little elated as a banker in the entire process. Now coming to Raj, you have touched upon how technology is used to mitigate the risk. If you can little elaborate on how satellite imaging and technology is used so that some of this financing risk is mitigated.
So before going on that, I'll quickly wrap up, like what is the kind of requirements that we are getting from a lending agency, be it a bank or NBFC. So what they are looking at is like before going on that as well, like an aquaculture farmer in an average spends about 15x of than what an agri farmer would spend. So that's a very, very high value ticket, transaction that we are talking about. And that is why the bankers and NBFCs are really keen on looking at aquaculture sector. But it comes up with a huge risk, right? Because it's underwater, nobody knows what's actually going on. So how do you actually create a risk profile for a farmer or any other value chain stakeholder here, right? So this is when we are talking about how satellite remote sensing as well as artificial intelligence can help us identify certain parameters like risk parameters. Something as Amit had explained, like, is this farmer really actively doing this job? Like we can, refer to the land records of that and then ownership of that particular pond, and then we can talk about what is the day of the crop in that particular pond. And finally, we can, define the electricity consumption, energy consumption of, running the aerators in that pond and everything, right? So these are some, much more granular detail that I'm talking about. So at a very high level, what I'm saying is with this kind of non-intrusive technology, we are now able to profile the risk of a particular player in this value chain. So for a farmer, we are applying different set of, data analytics. For a retailer who is in turn working and providing solution to the farmer, we are kind of, having some surrogate data points that are collected from the farms, and then we are matching it with that, retailer who provides input to the farmer. So in a way, buyer again, uses, like we use buyer as a collection, method. Like when the loan is given to the farmer or a retailer, the collection happens at the buyer level. So being a full stack provider, this kind of an embedded fintech play, helping us to have a better understanding about this value chain. So this transparency and predictability that we are creating is eventually helping the lenders to do a better job when it comes to aquaculture.
Thanks a lot for explaining the entire value chain and how the risk is mitigated. What I would request Amit to give one example where SatSure has been able to help in the policy making, whether it's a government or a regulator. One example briefly.
Okay, so I know we have run out of time, so I'll keep it very brief. Because as I said, it's data. It's something that has been existing for a very long time. We have worked with a few of the state governments where we are building something called as an agri stack. There is dispersed information. Can we create a platform which is a singular platform where all information is available in one go? Information can be very simple: who the farmer is, where is his land, what crop he has been growing, and then add ancillary data like looking at that particular plot, what may have been his fertilizer consumption, seed consumption, because this one digitized data set is going to enable the entire ecosystem. In fact, we are very proud to say that we successfully implemented this with government of Telangana, and today the technology has gone one step beyond. Today the data is helping them better negotiate on MSPs both at the farmer side as well as with the central side to get the money exchange being done at the earliest. So the DBT process is getting enabled through such kind of technologies. In fact, we have a masterclass in the next half where if we can talk more about how this technology has been enabling and helping. But that's it from my side. Thank you.